Hey guys, welcome back. Now, 2024 is set to be a massive year for the crypto market with so many bullish things coming our way. We have three massive mega cycles all converging at the same time. The Bitcoin halving, where supply gets cut in half, the US debt refi cycle, and the US presidential cycle. And is there a better way to kickstart the year than with a monumental milestone in the digital asset space? Several Bitcoin ETFs set to go live around January the 10th, opening the doors to billions of dollars of new capital. And as Michael Saylor says, it's the biggest thing to happen in investing in a generation. And we recently had confirmation that the Fed's rate hike cycle is now over and rate cuts will be coming next year as well. So seriously, how can anyone not be bullish right now? And so in this video, we'll be looking at bull market insights. How is this market cycle progressing against the previous ones? Then where do we think prices will be going over the next 1 to 2 months? And then we'll finish with the biggest developments that have happened in crypto all around the world in just the past couple of weeks. Okay, so first up, let's begin by looking at where are we in the market cycle and where do we think prices could be going next. And starting with one of my favorite charts in crypto, and this is the chart we're using to track this bull market cycle. And for any beginners, it's a great chart because it shows you everything you need in just one place. You have the big bull markets. This was cycle 1, cycle 2, cycle 3. You have the big crashes and bear markets. The cycle bottoms, this weirdly is when all of the cycles had bottomed in this time period here. Then crypto springs, this volatile ups and downs to where we're at right now, and it all revolves around this going through the middle, which is the Bitcoin halving cycle. So what we'll do today is we'll take a look at each cycle individually and see any insights or learnings that we can take on what happens next. So firstly, comparing it against cycle number 1, and this is when Bitcoin first launched, and this was when Bitcoin was around about $1. And in this cycle, weirdly enough, we're actually ahead of where it was at this point. And you'll notice in this one, there was some sheer vertical runs, and it ended up going up over 200. In fact, I think it was a 300x from bottom to top. Only a very, very small number of people were participating in crypto at this time, and I don't think many people would have had the diamond hands to be able to hold through a 300 times increase. Now, out of the 3 cycles that have gone, this is the one that I think is least relevant, as there were very, very few people participating and the price was very, very low. So I really don't think this next cycle is going to mirror this at all. So let's move on to cycle number 2. This was the cycle that I got involved in myself, probably around about here, and I pretty much had no data, no analysis at the time. I had no idea what had happened previously, and all of a sudden my money had doubled, tripled, quadrupled, and I'm thinking, here we are, we're pretty much all set, and got sucked into the first crypto winter, which ironically is where I learnt a lot more about the crypto market. Now, the cycle bottom pretty much happened at a very close period. So the learning here, if all the cycles are pretty much bottoming at the same time, then after this next big bull run and crash, we'll have a very good idea where it's going to bottom. And it's approximately about 12 months after the peak. So it's something to keep in mind. And again, amazingly, we are again ahead of this cycle of where it was at the time. One of the great things this one shows is the absolute roller coaster that could be coming our way next year as we get these epic runs, epic crashes, epic runs, epic crashes, and you can see this is just going to be a roller coaster of emotions. In fact, I personally myself prefer it when crypto just goes up in a much more steady pace, as it's a lot easier to stomach. When we get these near vertical runs, it just means we go into overbought territory and we're probably going to get a very harsh pullback. And you'll notice the bigger, the more vertical the run, then the harsher the correction is. But unfortunately, I'm probably not going to get my wish, and I'm sure we'll have steady growth, and we're destined to have these vertical jumps and crashes. So something else to be aware of. But the best cycle to compare where we are today is going to be the one that has just gone, as this is much closer to where we're at today. These prices were also pretty high. There's a lot more people involved in this cycle, so it's the best one to compare against. Now you'll notice again we are ahead of the cycle, which is an important point to note, and it wasn't too far from here that we had the big COVID scare, where we had a massive sell-off in crypto. And this just reminds me of a pattern that we may see further along next year if we do get a big recession scare. Something like this pattern could show up again. Maybe not quite as brutal, but a big recession scare could drop the market for a short period of time, crypto seeing a big hit before coming back. So that's definitely something I'll be keeping an eye on. And then just the nature of this cycle, I think we're going to stay ahead of this cycle in the short term. And this is just because of the powerful narratives of the Bitcoin ETFs and the halving, which is now getting shown all across TV and television networks and becoming way more mainstream than it was 4 years ago. So I think likely we're going to stay ahead of this cycle. It wouldn't surprise me if by the halving we were ahead, but I think the main difference is that we're probably not going to see the same vertical move that we saw here. This was when the Fed was printing an absolute unprecedented amount of money, and this was one hell of a move in crypto. My prediction is that we'll probably be ahead because of the ETFs, and then at some point it's going to be more of a move like this and coming back under, and then maybe a spike out to about a 10x from the market bottom. That is my gut instinct of what I think is going to happen. But obviously in crypto, anything can happen. But either way, I think prices are going a lot higher over the next year. And as you saw from previous cycles, we're going to get some epic runs. We're going to get some epic corrections. And in this cycle, it's still going to be like a roller coaster. So exciting times ahead. Okay, now on to the biggest developments that have happened in just the past couple of weeks. So, got several pieces for you guys, and the first one is Conio teams up with Coinbase to bring crypto to banks. So Conio, I believe, is a digital wallet, and they're partnering with Coinbase Prime, and this is to bring crypto to the banks and institutions of Italy. So I, for one, do actually want to see the banks and institutions involved, because this is where a serious amount of money is kept. So to see a big chunk of this pool of cash going into digital assets is always good by me. So great to see this. Number two, again with Coinbase, and they're working on bringing traditional finance assets on-chain with a new platform built on Base, their layer 2, under Abu Dhabi's regulators. So this one is called Project Diamond, and this is also letting institutions create and trade digital native versions of financial instruments, such as debt. i.e. bonds, using Base in a regulated manner. So again, this time in the Middle East, and this is going to be a huge trend in crypto, bringing all the traditional financial instruments onto the blockchain. So great to see this coming from Coinbase. Then, about a week ago, we saw that former US President Donald Trump had again done another NFT drop. So what was interesting about this is that 4 years ago, Donald Trump wasn't that crypto friendly. However, I'm thinking over the past 4 years, this may have changed. The fact that he's now using NFTs, and I believe these were launched again on Ethereum, the fact that he's learned more about the space, and I think he's polling better than Biden right now. One of the big things we need is a pro-crypto president. So hopefully Donald Trump has now turned a page. Then we saw confirmed that crypto to be measured at fair value under the new FASB rules, and this was something that Michael Saylor had been talking about for quite some time, and he said again it's another huge catalyst, and it's been confirmed that it's coming in end of 2024, beginning of 2025. And all this basically does, it makes it now super easy and much more of an incentive for corporations to be able to put Bitcoin on the balance sheet, just like Michael Saylor has been doing with MicroStrategy. So again, massive for corporations and coming in end of next year. Then you may have missed this small modification coming from BlackRock's ETF. So check this out. BlackRock modifies the structure of its spot Bitcoin ETF to allow authorized participants. And who are these authorized participants? It's mainly Wall Street banks. And it's going to enable them to be able to create shares in the fund, giving them exposure to Bitcoin, but without needing a license to own crypto directly. So they're basically giving a backdoor to the Wall Street banks to be able to get involved. And like I said in the first piece, anything that gives access to the banks and their huge deep pockets, and for them to be putting a large chunk of that cash into digital assets is a good thing, especially if you want prices to go up. Then we saw an ex-Credit Suisse exec launching a crypto trading place for banks. So I think you can see the theme here. There's a lot of stuff going on with banks and institutions, and this time targeting Asia and Europe. Great to see. Then we had the news, great news for Polygon, as they were chosen by one of the biggest, if not the biggest, Indian e-commerce giant, Flipkart, to start a Web3 loyalty program. And if you didn't know, India has recently flipped China as the country with the most people. So a massive, massive mega company partnering with Polygon. Great to see. And then finally, this is something that came across my desk just yesterday, and it really made me think. So what's happened after the Fed did this crazy rate hike cycle, bringing interest rates really, really high? This was really good for savers, and a record amount of money went into money market funds where they could get a high yield with basically no risk. So we have this now record amount of cash sitting in money market funds globally, 8.3 trillion. And what do you think is going to happen next year when interest rates begin to go down? So these money market funds don't pay out as much. And also they're seeing things like crypto starting to go parabolic. It means a big portion of this money is going to come out of money market funds and into things like digital assets. So another pile of cash just waiting to come in and chase the asset class that's going up the most. So very, very exciting pot of cash here. And then finally, we're going to finish with a short clip from Michael Saylor as he explains what's coming our way in just the next couple of months.
Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst. It's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
2024 is setting up to be a huge year for the crypto market, with so many things coming our way. The Bitcoin halving cycle, the US presidential cycle, the US debt refi cycle, rate cuts, and how better to start the year than with a whole bunch of Bitcoin ETFs. And if that wasn't enough, on top of that, the crypto developments from all around the world keep coming in thick and fast. And let me finish and wrap up with this important point. Now, it's all good and well that we all want crypto prices to be going higher. I'm sure that's why most of us are here. However, the important point is that it's not just all smoke and mirrors. There is something actually behind crypto. Fundamentally, blockchain technology is better than what it's replacing. It's faster, it's cheaper, it's more transparent, and it's safer. And it's a business model where now everybody gets to own a piece of the network. So there you are, guys. Hope you enjoyed. Now, this is the last update from me for the rest of the year. I will be spending the next week with family and loved ones. So just to say, I hope you have a great Christmas, a great new year, and I'll see you in January. So just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.